Hi everyone, welcome back to another session of using technical analysis to find good trading opportunities in the market. So today we are looking at Kiwi franc, right? And this is the chart that we're looking at. So what we like to apply is support resistance, Fibonacci retracements, Fibonacci extensions, price action. Sometimes you like to apply the Ichimoku cloud, and of course oscillators. So this idea on Kiwi franc, the first thing I like to do at the start of every analysis is to look for horizontal support and resistance lines. Now it is, if you look at here, you and I can both agree that there's a very nice level here where price tends to bounce off multiple times, right? You can see price making, let me see if I can draw it out for you. Price coming down and bouncing up, coming down and bouncing up, and then it's coming up, reacting, and now it's right at that level again. So hope what we're expecting is price to react off this level. Okay, so this graphically we can just draw a horizontal line as over here. Now horizontal support and resistance line by itself is not strong enough for us to take a trade. Usually we try to add up and see if there are different elements line up nicely with it. So the next thing I like to do is to take a Fibonacci retracement from the top all the way down to the lowest point here. And what we notice is that a nice 23% retracement is lining up with our entry. All right, 23%. I'm just going to highlight 38% too, and I'll show you why later. Okay, next thing I like to do, I will draw another Fibonacci retracement from here and I'll see if there's any levels that we can look at. Alright, there's a 38%. I think 50% lines up nicely with this 38%. Okay, so I can see nice resistance here, I can see nice resistance here. And the last thing I like to do is I like to take a Fibonacci extension. I'll take a Fibonacci extension from here to here, so I can get a rough gauge. Alright, so this is perhaps the maximum level which price can rise up to. Take another Fibonacci extension from here, and notice a 61.8 extension is right about here, 100% extension is there. Okay, I'm just showing you the analysis as it comes along. Why am I considering a 61.8 extension here? Is largely because it looks like we can see some kind of very basic Elliott wave structure. 1, 2, 3, 4, and then hopefully a 5 all the way down here. It is Elliott wave requires a lot more planning than this, but right off the top of my head I can see some sort of structure being planned here. So this is just for me to take a look at and have a rough gauge of, alright, there might be something that's forming here. Okay, but right off the top of my head, we can see that there's very nice resistance, there's a nice 23% retracement, there's a nice 61.8 extension. Okay, so if I were to put this as my sell entry, this as my sell entry right here, where would my stop loss be? My stop loss would be somewhere here, above this major resistance. So my stop loss would be more towards, maybe I could put it here, I could put it over here as where my stop loss is. I can put it here, I can put it here. If you want to be a little bit safer, you can put it here, but that means your risk to reward is not as good. But if you put it here, it gives it, we don't put it here directly, because price will most likely stop us out and drop down. So we just put it slightly higher than our major resistance. How far down are we going to play this move? I personally think that we can go all the way down to this major support. Price tends to like to be attracted to major support levels, so this could be our take profit, although I would actually highlight this level here as as the first level which I'll take partial profits at. Okay, then this would be the move down that we're expecting. Price to drop all the way down from a sell entry to this level. One thing I like to do, I always like to take a look at Fibonacci, at the Ichimoku. All right, you can just come here, you search for Ichimoku cloud. I'll load the Ichimoku cloud, and I can see that we are entering a bearish cloud area, and this is a good level where price might drop down from. Right, it shows that overall, and at the short term, we are expecting a bearish momentum. You can see that price went down pretty strongly with this bearish Ichimoku cloud momentum, and we are expecting the same thing here. You know, price is testing this level at Ichimoku level cloud, and this gives us additional conviction that price might drop down from here. Okay, so I'm just gonna zoom in a little bit more, and this is our strategy. You know, we're looking to sell at 67.22, stop loss at 67.44, and our profit at 66.57. Intermediate support at 66.96. So maybe I will not look to close off my position, a little bit of my position, if it comes down to this level. Okay, so that's it for me, guys. I hope this analysis has helped you better understand how we apply support resistance, Fibonacci retracements, Fibonacci extensions, Ichimoku cloud, and price action to finding good trading setups. Okay, thank you very much.